Hey traders, John Howell here. In this video, I'm going to teach you just one simple thing that you need to be asking yourself, you need to be talking and looking through, and the most important thing when you're looking at a chart when you're about to get into a trade. So let's get straight into it. Do not place a trade based on what you're seeing in this video. Trading is risky and it can cause substantial financial loss. There is no guarantees of making money in the markets, and trading is the most hardest thing you will ever do, and it takes a long time to become a good trader. So this video is just educational only. If you're struggling with your trading right now, then click on the very first link in the description and get learn a free training, the 7 universal laws to become a master trader that will boost your success, consistency, and confidence without spending a decade trying to figure it out. Click on the very first link in the description right now. Alright traders, so I hope you guys are doing well. Today I want to just teach you guys an awesome trading technique, use this technique when you're looking to buy, looking to buy mining stocks. Use this trading technique. And the trading technique I want to share with you, and the reason why I brought this up is that there's actually a few mining stocks that I'm going to share with you today. Okay, so the first mining stock is basically this one here, right? We're looking at NG, right? So NG is doing what? If you look at NG, you can see that NG has been basically making highs, making lows, and stuff like that, right? So let's actually draw this in here. Sometimes if you're not looking to low, just draw it from the major swing high, major swing low, major swing high, major swing low, major swing high, major swing low, and then major swing high. All right, cool. So when you're looking to buy in a stock, it doesn't mean it works all the time. But what you're looking for is you're looking to get into a stock or an investment. When you're looking to get into it, make sure that you're looking to get into the trade based on who is in control. Make sure someone's clearly in control. So if you look at this, and also depends on if you're looking for maybe a couple of day trade to up to a week, use the daily chart. But if you're looking for an investment position, look at the weekly chart, right? So right now we're looking at the daily chart. We can see what's happening. We actually can see the moving average is still pointing down, right? So this still on the daily chart, right? This still is pretty much the momentum is what? It's pretty much down, and we're getting this basically lower low. This could be a lower high, or if it starts to run up, make a higher high, this could be the change. So that's the first thing. If you're looking to trade it, right? You're looking to get in and out within a couple of days or up to say a week or two. Use the daily chart, right? So we have NG here, but have a look at say AG, right? First Majestic. What's happening with First Majestic here? What's it clearly doing right now? It's clearly making what? It's had a big run down, low, come back up, make a high. So it's actually still continuing down, right? So you wouldn't want to buy into this because it's a very low probability stock. Let me show you another stock here. Right, look at NEM. This is actually stock that I'm in right now. Now, why would I be in this stock? Well, there's obviously a lot of different, it met my 4-step trading rules, which is real simple. But who's in control of this stock? Look at this here. Market runs down, market runs up, market runs down, market runs up, market runs down, market runs up. All right, okay, cool. Now, let's keep this really simple. Market high, low, right? This is a lower low, right? So right now we have a sellers in control. But as you can see, when the market started running back up, the tune changed. It ran up, made a high. Now it's made a higher low. So who's in control? Who's clearly in control right now? Not what we hope or what we think or what we think is a good idea. Well, who's clearly in control right now? The buyers. Now, obviously that can change, and obviously that's the reason why you need to trade. But that's what you want to look at there, right? Buyers clearly in control. What about this stock here? So who's clearly in control of this stock right now? Let's just draw the lines in through here. Market swing down, market runs up. I'd say probably somewhere through there. Market swings down, market runs up, market runs down. Right. So you've got all these little highs and lows, but you're trying to identify the major highs and lows. If you see what I'm saying there, right? That's what you want to be noticing on. And then market runs up. So if you're looking at this market right now, market made a high. And this here was either it was this low through here or this low through here. And then the market make what? Now the market made a higher low with this bar up here. So who's clearly in control of this stock right now? Buyers. So it doesn't mean every single trade you get into with this pattern and this formation that the market's going to continue in that direction. Whether it's sellers in control or buyers in control. But when you're identifying a trading setup, make sure that someone is clearly in control. All right, that someone is clearly in control. And if you do that, you have just stacked the odds on your side tenfold. I don't know. And again, if you're looking to buy some basic metal stocks right now because you think gold and silver is going to go up, then use this one simple technique. Who is in control? Now, again, if you're looking for an investing position, for example, the one investing position that we've been looking at is NG. Now, if I bring up NG, let me bring up, say, just a blank chart here for a minute. I'm going to look up NG. Now, if you look at NG, what is NG doing right now that may signify a start of a new upward trend? What would that be? That would be a higher low, as you can see here, right? So this is now potentially making a higher low. If we do start to, especially if we do start to break up and out of this sort of, actually you can see it's actually broke up and out of that, isn't it? So that's actually a pretty powerful sign. So this here could be, a good risk to reward trade for a weekly setup, right? Weekly. Now, what would be the trade? The trade would be you would enter here, right? Now, again, I'm not saying you should do this, guys, by the way. You enter there, and your stop would just be, and your stop would be below here, and you would have at least a two times profit to risk. So what is your risk there? Let's actually do this here. So your risk is from there, and then say just below here, right? So your risk is 65 cents. Call it 65 cents. So you're risking. Let's actually do this here. Let's do. So you're entering here. So you enter. And you're going to have 0.65 cents risk. Right, so you're going to have 65 cents risk. So obviously 65 cents risk. Now, if you're looking at that on a calculator, I know I'm going to be... Let's do this here. Right, so what do we have? We have 65 cents risk. Now we're going to times that by at least 2, right? Times by 2. And that equals $1.30. Simple math, isn't it? I know, I'm losing it this morning. Anyway, so $1.30 in profit would be up here, right? So $1.30 would be up here. So you would have this trade set up here would be a 65 cent risk to $1.30. So and therefore this would be a risk. And this here would be a profit objective up here. Profit. A profit objective. Profit of obviously of $1.30. Now that's obviously per share if you're using this options or whatever. But now you've set up a plan, right? You want to do, if you're doing that, and let's just say, for example, that's going to be your plan, and your risk here, your risk here is 65 cents, but your position sizes, let's say, for example, your position sizes, you're going to risk $1,000 on every single trade here, all right? And just say that $1,000 is not a large percent of your account, but now you're looking to gain $2,000, right? So every time you get into a trade with this sort of setup here, you're looking to risk $1,000, which is 65 cents. You're going to position it. You're going to have the amount of shares, amount of contracts, whatever you're trading, where you're risking now a maximum of $1,000, right? And now, but your profit target is going to be the $2,000. Well, even if you're 50-50 right, you're going to make money. I think if you're 30% right, well, you're going to break even. So as you can see, right, that's the way that we should be approaching. That's why you should be approaching trading all the time. If you look to get into here and so on and so forth, then that's where you want to do it. So here are some simple things, guys, that you can do. I'm not saying you should do this on this position here, by the way. If you're going to trade a trading plan, a trading setup, you need to have that set up on every single trade you take. You know what I mean? Like, don't say, well, I'm going to take this setup here and this setup here. No, have your ideal setup. Create a trading plan on that setup and trade that exact same trading setup every single time. Don't trade something based on what you think is going to do. Have a trading setup and trade that trading setup as every single time, no matter what.